What's up everyone and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast potential price movements in your favorite cryptocurrencies and also see where we're buying and selling these cryptocurrencies ourselves. I apologize, yesterday I did not have one of these videos up on the channel. The day just got away from me and I was not able to post one. But we'll make up for it today with a bit of a good analysis here. So starting off with Bitcoin on the monthly time frame here, you can see the R3 yearly pivot here up at about 63.2 has held pretty significantly for this drawdown in price. This closes in about a week, so at the end of next week, roughly, this monthly candle will close. If we break the low of March's candle down here at about 45K, monthly high will be set, so that we'll know that finally after this dramatic rise in price, we've finally set a monthly high, and then we'll look to form a monthly higher low somewhere above the September low of around 98.21. And the reason for that is because it's such a significant rise in price since we set that recent low in September. We've appreciated more than 500%. So it's very, very likely that we will not just form a high, here and then come down and just go to a new lower low. It's far more likely, given this gap in price, that we'll do something like come down, bounce somewhere, and then we'll either come up and do a new higher high above this one, or we'll form a lower high and then go down into a lower low, which would be a bearish monthly trend. Those are the likely options, just because the way that market cycles work is, you have this crazy run up in price, and then after that you have a subsequent dramatic drawdown in price, and that's because everyone that went long in here, this is going to end up getting cleared out on the other side of this trend. So like I said, it's probably going to look something like, I imagine now with the way that the price action has been going, that this probably is the high, just because we only have 7 days left for this monthly candle to close. And if it closes anywhere, even if it closed up at where it opened, up at about 58.8, that would still be bearish because it would be a doji candle. So it's very unlikely that we'll go all the way back above the R3 pivot and close above that to continue this trend higher. So this is looking like this might be we might be getting to the top of that monthly trend. Let's go to the weekly time frame. I know in the recent videos I've been talking about still buying the dip and stuff, and the price action up until I would say yesterday, the day before, was looking good to buy the dip, and we'll talk about why my bias has shifted. But starting off here on the weekly time frame, you can see that we have not pulled up after forming this Darth Maul candle last week. We've subsequently opened and then traded down below these lows once again, which is not like the end of the world in terms of bearish price action. Like, it doesn't necessarily mean that we're going to continue to go down significantly if on the daily time frame we make a move. But our main support level is down here at this weekly low that we set from January. So this is going to be the area that I imagine we will set a higher low in price on the monthly time frame. I'm sorry, yeah, because if we don't, then the next support level after that is this low right here. So we can draw a little rectangle around this guy. So this guy down here is another low that we set before we continue to rise in price. So that's also an option if we continue to go down, that might be an area where we look to bounce. And that's from December 7th. So that's going to be at about 19,500. This weekly support here is about 37.9, so that's right around there is where that support level is going to be. If we go to the daily time frame, here's the trade that I'm looking to take. So we've been talking about these three levels, this blue level and these two gray levels in the past videos. So you can see we've only been declining since we had this high on April 14th, and we subsequently have not came up yet and formed a lower high in comparison to the previous high here. And so we need to eventually do that, because it's not sustainable to just draw down in price significantly every day and never, come up and form a lower high. Eventually you have to come up and form a lower high. We're getting close to being oversold on the daily time frame, so it might be that we have to get into the oversold territory here before we have a bounce. But if we do have a bounce, this gray zone right here is going to be a resistance zone for us. And the reason for that is because this is where the trend was bearish. We had our high, low, lower high, and then lower low with two candle closes below this key low. And so that made this a potential resistance zone, but then we pushed through that zone. So once we did that and closed these candles above it, this was now a support zone that we talked about going long here on the channel. We went long here, had a nice rise in price, and now we've pushed through that and closed both of these candles below that. So now this turns into an SR flip zone, which is a support resistance flip, which means an area that used to be support right here is now going to flip to be resistance. And so the way that I like to play these levels is very simple. I like to put my orders where these pink levels are. So one at the bottom of that wick. And then this pink one is on a 12-hour level that I'll show in a second. And then my stop loss right at the top of that level, which is up at about 55,888. Now, I don't like to go short on the daily time frame because it usually means that the trend has changed from bullish to bearish, and that's kind of what we're seeing here with this price action. But you got to go with what the charts say, and there's nothing wrong with going into a bear market. I want to be very clear with people that that doesn't mean that the money-making capabilities of the market are over. In fact, it means there's just as much opportunity on the bear side as there is on the bull side, because there's, as quickly as you can rise in price, you can decline just as much. You look at the monthly time frame. Once we set that monthly high, there's going to be a pretty, decent, sizable rundown in price to catch. And so I'm looking to get into a daily short entry here up at these levels. The reason is there's a couple different reasons, and I'll walk through this trade real quick. So the first is this blue zone, which is our support zone here. We can I took it from the 3-day time frame down to the 1-day because it's easier, because everyone has the 1-day, even if you don't have the premium version of TradingView. So this is the main support zone on the daily time frame. This is our last down candle here before this rise in price where we had the bull trend. You can see that it held here nicely for a rise. Here it held for a second, but we didn't come up and form a lower high. We just kind of went down, wicked into it, and then kept declining. So we might bounce off of this one more time here and come up in this gray zone. If we do, that's where I like to go short. And then this will be, if we come down into it a third time, that's the third test of this level. It gets weaker, a support or resistance zone gets weaker with each subsequent test of it. So the third test of it will be weaker than this first and second test here. And I will look to that level to break and for us to go down and form that monthly high, which is the break of this blue line. And then go down to subsequently, if we pull up the Ichimoku cloud, the bottom of the cloud, which is down here at about 39.7 roughly. So it's a really good risk-reward ratio on this one, about a 5.46 if we go down into there. The other thing about the Ichimoku cloud is the edge-to-edge trade is what it's called. So for cloud traders, what they look for sometimes is clouds that are thick like this. What they look for is when the price closes inside of that cloud, that signifies to them that it's likely that they'll probably go to the other edge of the cloud, hence the name edge-to-edge trade. So what I can see happening here is a scenario like this, where we come up into this zone, we reject off of it, we come back down, we close inside of this cloud, and then we go down into the other edge of the cloud, which is down here, roughly. If we do it at the, over the next like week, it'll be right around 39.7. It starts to creep up here and get over to around 40K. But either way, it's a good risk reward. Even if we only went down to, like the edge over here or something, it's still like 20 some percent. So that's the area that I'm currently looking at. I think there's pretty good confluence there with this gray resistance level, this weakening blue level, the monthly time frame looking pretty bearish, and then this edge to edge trade on the daily time frame. Going to the 12-hour time frame here, there's a couple things to watch here. So I have a couple different levels here to keep an eye on. This purple level here, we wicked below it, but we haven't closed below it, and you can see that we're kind of bouncing off of this level slightly. Excuse me. And then we have this purple level here. Both of these are purple levels because they're support zones, as for the time being. This is our black candle right here where we came up, came down, set a higher low, and then continued this trend upwards. You can see that this level has held right here as well as right here, and now we're coming into it a third time. Now, last 12-hour candle, if you look closely here, you can see we closed below that purple zone right here. So if this 12-hour candle closes below that purple zone again, that turns the purple zone into a resistance zone. So if we're short-term bullish, what we want to see is a close back inside of that zone on this 12-hour time frame, and then a subsequent rise in price off of this low right here. You can see we're starting to kind of do that now, and it's not unlikely that we do end up doing that, because on the lower time frames you can see we're getting this decreasing bear volume, and we might finally be forming a 4-hour bullish trend here with a low, high, higher low, and then potentially a higher high. We'll see though, because the main resistance zone that is above is this gray zone that we talked about from the daily time frame, and this yellow zone right here, which is a 12-hour resistance level. And the reason we know that it's a 12-hour resistance level is because of the trend. So once again, we're just looking at the trend. We have our high, low, lower high right here, and then lower low. We go down for a new lower low, and that's a confirmed bearish trend. And so this area where people were buying, this white candle, is going to be where the people that were buying there are going to sell their Bitcoin, because they see now, oh, okay, this area that I was buying did not hold, and now we're actually in a confirmed bearish downtrend. So that means that now I want to go short on that. So that level, the whole candle is going to be a resistance zone, and you can see that that's where my other ask is at, my other area that I'm going short. So I have my initial one on the bottom of that daily gray zone, and then I have another one here at the body of the candle, which is up at about 53,819. And then if we pull up our VPVR, we can see that there's not a lot of volume. There's two high volume areas. There's this zone right here, which is like this kind of these gray levels, and then there's this zone down here, which is pretty much our purple zone right here, and then our daily level, which is this blue level here. So you can see that these line up very well with the daily blue level and the daily gray levels. So we'll see what ends up happening in the subsequent price action, but the areas that I'm looking for are, this short entry here, and then the only way that I'm going to flip back and go consider going long is if we do start to see the lower time frames, like the 4-hour, shift back to bulls with a bull trend here with a higher high, and then they're going to have to shift it on higher time frames. So you're going to start to have to do it on the 12-hour time frame then, and start shifting it there, and then the daily time frame, they're going to have to start shifting it there. And so you just keep zooming out when you're looking for the trend to change back to the bulls. When you have bearish price action like this, going from the lowest time frame up to the highest time frame. So for the bulls to do it, it's going to take for them to go to a new all-time high over time. They're going to need to really make a move on these lower term time frames. But the difficulty is the monthly time frame drives all price action because it's the highest time frame. And if this ends up closing bearish, which in my opinion, now that we've driven down this low in price, there's a very good chance that we do end up closing a bearish monthly candle, and then subsequently the next month, once that opens, having a drawdown in price. The lower time frames don't matter, so the monthly time frame is what we need to take, be watching it, keeping a close eye on. And then the lower term time frames is where we scout the entries, for shorts. So that's what we're looking at right now. That's what we're dealing with on Bitcoin. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And until next time, onward and upward.